I want to go a couple of different directions. First, and I think some colleagues have already raised this, but the truth is what we're grappling with right now on inflation is clearly a global phenomenon. I think even the Cato Institute group that doesn't always necessarily agree with folks on my sides of the aisle have pointed out inflation in many industrial countries around the world is running at the same rates, if not higher than us. I frankly just returned from a bipartisan trip to Finland, Latvia, and Turkey, getting back late last night. I'm still a little bit jet lagged. And Turkey, I think inflation's running at 78% a year. Finland gas prices were at $9 a gallon, and I asked one of my dear Republican colleagues, you know, it's amazing. Joe Biden's inflation hitting here in Finland, too. The point being that a lot of these effects are not due to any single country's activities, but it is a global effect. I think colleagues have already acknowledged the effect that the Russia-Ukraine war has, some of the disruption on supply chains. What I don't think has been fully addressed yet is some of the challenges that are coming around from China in terms of their zero COVID policy, a lockdown on Shanghai for literally months on end, and how that supply chain disruption is floating through the whole global economy. Can you speak to that, Mr. Chairman?
Sure. So, of course, you're right. Inflation is very much a global phenomenon. If you look at comparable large advanced economies like ours, you'll see inflation rates that are quite similar to ours, in some cases higher, some cases lower. But there are important differences in the characteristics of that inflation. Ours is more about demand, I would say, than most of the others, and theirs is more about energy prices and things like that. In terms of your question on China, we don't think we've seen the full effect of the lockdowns that we've had, but we'll expect to be seeing some negative effects on bottlenecks. On the other hand, China now seems to be coming out of that period of lockdown, and growth seems to be picking up. Advanced indicators are that their economy may be recovering, but of course the zero COVID policy, as long as it's in place, it certainly could. You could certainly have a relapse given this highly contagious disease.
Let me and again, we're all looking for short-term items, and frankly, I'm glad that the president, I know particularly some folks on my side of the aisle are concerned about the president visiting Saudi Arabia and visiting with the leadership of that regime. I think you've got to use all the tools in the toolkit, and getting additional partners in the Middle, or players in the Middle East to increase oil production, I think is important. I'm a little less, I got a lot more proof to see whether some kind of short-term gas tax holiday would actually provide relief to consumers, or simply, as we've seen in some states that have implemented it, the prices don't change and the companies may make more money, but it doesn't provide that kind of inflationary relief. And I am concerned, as somebody who spent a long time as governor and as senator trying to make sure we pay for our infrastructure investments. Easy to take away a tax, tough to put it back on, and there's always an excuse not to, but I'm open to seeing a better analysis. I do want to raise, in recognizing that not everything can be done with a flick of the switch. You know, there's a piece of legislation that has been floating around here for almost a year, passed the Senate a year ago on a broadly bipartisan basis, passed the House a number of months ago. I think the House, frankly, took the wrong approach. But it goes at least one of the inflationary pressures here, which is making sure that we've got a domestic supply chain on semiconductor chips. Every device that has an on and off switch requires a semiconductor chip. And right now we see, particularly around auto inflation, one of the big drivers is the lack of chip supply, so cars can't actually be sold. They're literally sitting warehouse waiting for the semiconductors to come around. This legislation, $52 billion of investment, would build at least 10 semiconductor facilities here in America. I know Senator Brown has been a big advocate of this. If we don't do this, I don't think there'll be another semiconductor facility built in America, even though some have been announced. I point out the fact that, you know, a year ago the Europeans had no plan here in semiconductor investment. Intel recently announced $8 billion from the German government. When the German bureaucracy and European bureaucracy moves faster than the American legislative process, I don't care which side of the aisle we're on, we're in trouble. So in the last few seconds, I know you don't want to weigh in on a specific piece of legislation, but the notion of investment in a key industry component like semiconductors, long-term in terms of keeping inflationary pressures down, right move or not?
Again, I wouldn't, as you say, I wouldn't comment on a specific legislative proposal.
Talk about the industry sector.
I'll just say that I do think we learned a lot about global supply chains, and we're still learning. And it's important to take the right lessons, and I think it's an important area to explore about how we can harden up and improve our sourcing capabilities, including what should be here.